What an absolute bloodbath it is currently in crypto. It's one of those situations where there's different factors playing into this. We're going to be diving into those different aspects in this video. So drop a comment, drop a like, subscribe if you haven't already, and try to keep up to date with the content we produce here on the channel. Fear and greed index is currently reducing. It's going back down. This is expected with everything that's going on. It's not something I pay a heavy amount of attention to during times like this. We all know it's going to be going down, but crypto itself, it's just across board. I can't see realistically anything that's not taking substantial hits at the moment, and it's all just something that you've got to kind of factor into your play. Whatever your strategy is, whatever kind of moves you're making, this is just going to be something you're gonna have to factor in. But we do have historical evidence to show us that leading up to these halving events, we do see this kind of behavior of small runs, dumps, runs, dumps. So it's just kind of a situation of trying to figure out where the bottom is on this and where the top's going to be. So currently 21% down. I've got this on the day chart, and the specific reason why is I want to go zoom out here and I want to go to these twin peaks here, which is specifically after the halving event, as you can see, marked out here being the third one on the 11th of May. So as you can see, right, we have, if we come in, we zoom in, we see these movements during these lead ups where there is 20 or 30% downtrends, but followed then by a very substantial uptrend, followed by a very substantial downtrend this time, then coming up again, coming down, coming up again. So I think we're in for a ride. I think everybody's going to need to buckle up. And what's realistically hurting the market a lot right now, from what I can tell, specifically looking at the routers, looking at all of the different news feeds, is this kind of liquidation that's happening with the Grayscale Bitcoin Trust. And there's so much news out there in regards to this, but I think this is just one of three things. And the other two things I think is just the markets are cooling down, specifically futures and options. There was a very substantial run. A lot of money's been made. People are probably pulling back and waiting for the market to settle to see where it lands. Like I said, trying to figure out where the top and the bottom is. And Bitcoin, it kind of dictates that with BTC dominance and stuff like that. But the sentiment shift's so important, because as we get drip fed all of this news, as it starts to hit crypto news and coinage and all of these different sort of outlets that you can go and look at, like Cointelegraph, all of them will start producing the same kind of stuff. That then trickles down the chain. It hits validators, it hits developers, it hits just everyday holders, and the information gets distributed and the market reacts. And this is kind of what they're banking on, because ultimately these ETFs always meant that more or less liquidity was going to have to leave the sector to return back into the sector in a different form. So I think this could be what a lot of people would say is a dead cat bounce or something like that. I think we're in for a maybe 20-30% dip, and then we're going to be coming back up again as that BTC starts to cycle back into the system. So obviously we are seeing a lot of liquidations. We're seeing a lot of outflow, and this is just all attributing to the total mess of what has been caused with these ETFs, with the greed that's all based around these and the interest rates and everything like that. A lot of people saying it's greed driven. From my point of view, it definitely looks greed driven. So FTX also sold about 1 billion of Grayscale's Bitcoin ETF. This is realistically explaining just how much outflow there is. This is a good article. It was a good read. It gave me a good perspective as to what's going on and what all of this is. And realistically, when everybody called for these ETFs, I think it wasn't thought too far into the future as to what this would actually mean for the market. But hey, maybe the bigger players who do trickle the information down did know what was going on, and there's so much money to be made in shorting a coin as well as going long on a coin all of the way up. So these are all important factors that we need to look at and take into play. But the sentiment shift is more realistically, people are calling for $35,000 per Bitcoin, and that's getting louder and louder. And you've got so many different people that are forecasting this. You've got the typical people like Charles Edwards. He's more or less saying it's going to come down to that. And once again, it all trickles down, doesn't it? It all sort of hits on this kind of situation that's playing out. So this article and a lot of other people, and I personally believe this dump is probably not going to stop until this liquidation eases off and the market kind of balances itself back out. It's going to be really important that you try to pay attention as to what's going on with the Grayscale Bitcoin Trust, because this is realistically what's causing the actual outflows. What we can actually determine and look on the money flow system and say to ourselves, this is definitively affecting the price of BTC, and that in turn is affecting the price of everything. And then we're all going to go for a kind of like a squeeze now, I think, as we move in to this halving event. But I think a lot of people I speak to, they think BTC just halves, it goes to the moon, and that's kind of cross the T's and dot the I's. But it's simply not the case. Historically, it shows us that it runs between 6 to 12 months afterwards. We see a run, we see another run, like I was showing on the chart back here. But as to the bloodbath currently, it is absolutely insane, and it's a crazy situation. I always find myself as if I'm in a car that's driving very fast and the seatbelts aren't buckled up, and the best thing that we can do is realistically just buckle the seatbelts up. Some people like to do long-term trades. I know a lot of people day trade. I have a lot of long-term trades where I just keep dollar cost averaging into them. I don't worry about big dips like this, and I'm really playing the long game with some of these coins. And XRP for me is definitely one of those coins that I'm just holding for the long term, just because of the potential, everything that it's been through. Eventually, every dog has his day, so to speak. And I think XRP's days definitely coming in 2024, so to speak. But these articles are really good. I'll definitely leave links to these in the description so you can go and check these out yourself. It's important to go and do your own research, try and get yourselves up to date. And like I was saying, these ETF fees at 1.5%, they're saying it's just simply just greed, and this is not helping, and you're seeing a lot more liquidations than you should be seeing. But ultimately, I think from as far as I'm aware, this eventually goes full circle. So everything that's gone out, the likelihood is it's going to pour back in and more, but it's just going to take time, and it's part of the process. And I don't think there's anything you can do to speed that up other than reduce these fees down to a more reasonable rate where it makes sense for people to go do it quickly, do it now. So whether they're going to do some kind of phase like that where they do drop the fees down, they try to get people to come over quickly, just trying to speed up the process, so to speak, to minimize the damage to the actual crypto market. I think that's really important, especially with the SEC and how they're supposed to protect the investors' markets and things like this. These are the kind of things, right, that do have an effect. They know it's going to have an effect, but they don't actually protect investors by trying to make the process as simple as possible and as simplified. I can't stress enough how important it is to make any kind of situation like this as simple as possible and as easy as possible and as frictionless as possible. It's just the best route to go through. But let me know if you're holding BTC. Let me know if you sold at the top, if you feel like you got a good trade throughout this thing. It's important. I want to hear about these kind of things because I'm starting to trade more long-term trading myself, and these ETFs, everything that they were chalked up to be, it's kind of, from my point of view, it was definitely a buy the rumor, sell the news kind of situation, because as soon as those ETFs land, boom, we see this, and then we start to see the evidence mount up as to where these outflows are going to and all of the different unique events that are going on. And this is realistically a relatively unique event, because you're just not going to see this kind of bankruptcy on estate holdings ever, probably again. I think this is why it took so long to get this all to where it needed to get to. But folks, that's all I've got for you for now. Stay safe, trade safe, don't be greedy, take profit where you can if you feel that's something you need to do. I'm not a financial advisor. You need to make these decisions for yourself. But me personally, I'm definitely holding on to a lot of my long-term positions and just riding this thing out, because we're so close to the halving event. A clown could probably come down from space with a new meme coin and it would go to the moon at this point. So I'm just trying to hold on, trade safe, and leave all of the options on the table, so to speak. Folks, stay safe, stay humble, stay aware. And as always, I'll catch you in the next one.